Welcome back to the Innovative Accountant Podcast. I'm your host, Tim Coakwell, and we have an exciting episode for you today. The theme of today's podcast, we're going to be talking about the insurance industry, the changing needs of clients in insurance. We're going to be looking at the integration of financial services, planning, insurance, and really how the industry is being professionalized today. We're also going to spend a little bit of time learning about scaling businesses across the country. And we have the most perfect guest today, a good friend of mine, Jim Virtue, President and COO of PPI. Welcome to our podcast, Jim.
Great. Thanks, Tim.
Yeah, it's nice having you here. Jim, I've known you for quite a while. We've benefited through your relationship with our president at Wealthco, David Udy, for a number of years. We've always appreciated the support with PPI that we've had. So it's been great getting to know you. And what I thought I'd do is just for our guests, share a little bit of your background, Jim, just so they kind of know where you come from for those that don't know you. So first of all, obviously, your background as an accountant. I've been following your career for quite some time with admiration. You know, you started off with the CA training. You've held various senior positions with trust and life insurance companies before becoming an independent life insurance advisor in 1995. You purchased your first MGA, Managing General Agency, in Calgary in 2000, and for more than a decade grew the financial management group of companies through mergers, acquisitions, until becoming part of PPI in 2010. Since joining PPI in 2010, you've contributed to growing PPI to the largest MGA in Canada, supporting over 5,000 independent insurance and financial advisors through 18 offices across the country. Your contributions to PPI have led you to become the president and COO in 2018. And you've had an extensive amount of experience there, Jim, involvement in roles, chair of Advocates National Board, chair of the Institute, the designation granting body of Advocates, and president of the Calgary chapter of Advocates. So that is a long pedigree of accomplishments, Jim. And I guess let's just talk a little bit about that. Your background, what's sort of driven you in your career to accomplish all these great things?
Well, I guess obviously I was driven, but I think an interesting part of the story was, how did I get into the CPA business? I've always been sort of a numeric person, always been extremely interested in business, and it just dawned on me that accounting is a great background to help you understand how business works, and it's the way I sort of think numerically. So that was a very good stepping stone for me. I articled here with Coopers & Lybrand in Calgary in the early 80s. And I didn't really want to spend my time doing that. I wanted to get out into the business. So shortly after I had my time in, as we say, I joined a trust company here in town, in Calgary. Worked there for a while, ended up working for the parent company, and it's a long story, but we owned a life insurance company. And I got involved in some distribution issues relating to the life insurance company, and I really enjoyed that type of work. So it sort of took me away from the traditional accounting side, and eventually I became the regional vice president for a life insurance company in Calgary. So what that did was it gave me just a tremendous amount of insight into the actual industry, into what advisors were doing. I spent time talking to advisors, helping them work on cases, talking to them about how they prospected, how they built their business, and those things. And I found it incredibly interesting to the point where, as you mentioned, in 1995, I left that corporate role, went out and became a life insurance advisor. Very shortly after that, like I think a matter of a month or two, I partnered with a tax lawyer who was doing the same thing. He was specializing in IPPs, and the two of us got together. He sort of did the IPP investment side, I did the insurance side, and we had a very successful partnership for 5 years until we bought our first distribution company in 2000.
And that was financial management?
No, that was actually a company called Woodman Financial.
Oh, right. Yeah.
And it was the MGA that I was dealing with at the time. And the gentleman who owned it came and said, Jim, I'm going to retire. This is a great business. You should buy this. And what's funny is the first time he came to me, I said no. So I said, nah, I'm sort of happy with doing what I'm doing. I think I'll stick with that. And then a couple months later, and I'm thankful for him of doing this, a couple months later he came and said, Jim, you really should rethink this. You should look at buying this. And I was thinking about it earlier today. I'm not sure what changed, but I decided that, he was right. It was a good opportunity. So in late 2000, we bought, myself and my partner, bought that business. And what was obvious to me, Tim, was that it was at that time in the early 2000s, it was an industry that was, I would say, screaming for consolidation. Okay, it was incredibly fractured. Mm-hmm. There was no major player. There might have been an MGA that had 2% of the market, something like that, and contrast that to today's market where the top 5 MGAs have about 55% of the market. Right. Yeah, right? So there's been a huge amount of consolidation, and we were part of that. But it was very clear that it was an industry that just needed to have someone come and and build out national resources, etc.
So you've, obviously, Jim, great experience in building and consolidating. You've spent a ton of time traveling across the country. Your roots, let's go back a little further. Your roots, you were born in Ontario, is that right?
I was born in Ottawa, but I grew up in North Bay, Ontario.
Okay.
Yeah.
And so how did you find your way into Calgary? Like you've talked about accounting. Is that where you did your accounting? Was Cooper's in Calgary?
Yeah, Cooper's in Calgary. Yeah. I'm not sure I should tell you the truth, but I will anyways. So I went to Queen's, and I did my commerce degree at Queen's and majored in accounting, like all good accountants do. And then the choice was for me. I didn't really want to live in Toronto, okay, because I grew up in North Bay, quite a small town, and I guess in Toronto intimidated me at that age, so I didn't want to live in Toronto. So I was actually trying to move to Ottawa, and all the accounting firms in Ottawa seemed to have this theory that they had an obligation to hire the people from Ottawa U and Carleton.
No. And
I actually had a couple of interviews with them, and they said, well, Jim, you need to go work in Toronto because you're from Queens. I said, yeah, but I don't want to live in Toronto, right? So then it just came. I just thought, Calgary seems like a nice spot. It's booming, which changed shortly after I moved here. Yep. But it's booming. Seems like a great opportunity. I had a couple of friends from Queens that were living here, and so I moved to Calgary. There wasn't a tremendous amount of thought in it, but the truth is, I really like Calgary. I moved here in 81, I think, and I, consider Calgary now home after 40 years.
Yeah, that's fantastic. Yeah. It's a great place to be, and just always interesting to see. And you spend your time now a lot in Toronto, do you not?
Well,
in Ontario?
Prior to the pandemic, I used to. Yes, I would spend about, half of my time in Toronto. But I haven't really since the pandemic. But I'm going to Toronto next week, just for the first time in 18 months. So.
Well, it's been interesting to follow this, and you've had this career. How do you balance all this, Jim? You've got, you're on boards, you're president PPI, you're traveling a lot. How do you keep centered? How do you manage all of this?
Yeah, well, see, you're making the presumption that I am, which I'm not sure is a great presumption. We have a cottage in the Shuswaps that I enjoy spending time at. I like doing adventure travel. I've climbed Mount Kilimanjaro and gone kayaking in the Antarctic, and so hiked the Grand Canyon, hiked the Swiss Alps. So I like to, when I take the time off to get away, go and do something. I'm not much of a lie on the beach guy. Yeah. I'm sort of a go out and do something person. So I'm really chomping at the bit here to get back out there doing something, right? Yeah.
No, that's perfect, and so important to get those batteries recharged and keep going. But let's talk about PPI a little bit. So you went to financial management. You had that company. You then merged that with PPI. Talk a little bit about that opportunity and why that made sense for you at that time.
Well, it actually made a tremendous amount of sense. So let me start with, in 2004, I think, we took our company Woodman, merged it with financial management. Financial management had offices at that time in Vancouver, Calgary, and Edmonton. We had an office in Calgary, so we sort of were a Western Canada-based company. We then, over the next 5 or 6 years, purchased offices in Winnipeg and Toronto and Halifax, St. John's, several Edmonton, rolled them into what we had. I think we did about 15 different acquisitions in total, built out a national footprint. What was clear to me was, it's easy to buy things, it's hard to integrate things, but what's important when you're building the business is to actually have a value proposition for the advisors, okay? And we worked hard on certain parts of the value proposition. I think we did a good job on advisor education. We did a good job on sort of helping advisors with financial planning concepts and those things. But PPI was truly, at a whole different level than we were at, and I'll talk about that now. Jim Burton founded PPI. Now it was 43 years ago. Okay, so. And he was, he is truly a visionary in the life insurance business. He invested significantly in advisor resources at PPI that, to that date, we hadn't. And I'm not sure, to be truthful, that I would have had the nerve to invest in it at the same extent that he did.
Right.
Okay, so he had a couple of different things that were incredibly attractive to me. Number one is he had his own group of actuaries, accountants, lawyers that specialized in estate planning, development of products, and helping advisors make sure that when they're working with their clients for estate planning purposes, that they that they're placing the product, putting it in the right company, making sure the beneficiary is, like structuring it.
So the
correctly.
planning side.
The planning side
yeah.
of it, right? So because high net worth insurance planning is complicated, and there's things that you need to be aware of. So Jim had built quite a good part of his organization that did that. Secondly, he had built a lot of tools to help advisors run their businesses. We still use a bunch of those tools today. We call it the PPI Toolkit,
right.
And we've just recently moved it online. It's now Toolkit Direct. He had built all those tools that we didn't really have those resources. So when Jim approached me in 2009 and said, "I think I have a lot of tools that would help your advisors. Why don't we get together and do something on that?" I was very interested in that. And our talks culminated in 2010, him purchasing 50% of what was then called financial management, and we rebranded it to PPI Solutions.
Right.
So,
right. Yeah. So we talked about the theme of this podcast being a little bit of the professionalization of insurance services. Let's go back a little bit in time. So, you've been in the business a long time. Jim Burton was in the business obviously a long time. When you look at that sort of service delivery, that product delivery, a few decades ago, what was that like in sort of comparison today, and how have these tools really changed that experience?
You know what? I think the industry is changing hugely. Okay, if you go back 2-3 decades, it was largely, it was a sales-based business. It wasn't an advice-based business. And if you go back 2 or 3 decades, really PPI was the only company that was operating in the high net worth, truly built around a planning model as opposed to a sales model. Okay, I mean, Jim often tells stories about, I remember when we sold our first, $1 million face amount policy. Now we fairly regularly have $1 million annual premium policies, not face amount policies, right?
Yeah.
So the industry has changed, but I think the main change I've seen is this whole concept of the professionalization of the industry, right? It used to be, as I said, very sales based. So here you have individuals who are being recruited to, at that time, there really wasn't this independent advisor concept. They were all working for insurance companies as career agents, and they were being recruited mostly for their sales skills, their closing skills, as opposed to their planning professionalism.
So starting with the product first and sort of finding a fit for it, as opposed to starting with the client center first and sort of working the other way.
Yeah, today we more start with the client need, as opposed to the product, So, but that wasn't the case 30 years ago.
No.
But it is the case today. And I think, what we've seen is a huge increase in the professionalism of the industry. I mean, for example, today there are many CPAs who are working in the industry. There are many lawyers working in the industry. I was the chair of Advocates, which is the Financial Advisors Association of Canada, I think about 5 years ago now. And that group, when that organization, when I was there, we actually changed our constating documents to say that if you want to be a member of the Financial Advisors Association of Canada, you have to have a designation.
Right.
Well, that's a very different way of looking at it than it used to be looked at.
Yeah.
Right.
How did the advisors sort of adapt to that change? Like, there's still, you still come across people that are very much sales driven.
Yeah.
How has that evolved? Is it now the norm? Is it what's expected? What does that sort of feel like today compared to 20 years ago?
It's a there's a continuum here, and we're marching towards it,
Yeah.
right? But I think that most advisors today, whether they have a designation or not, understand that the industry is based on, planning, professionalism, doing what's right for the client. And I have to say, there's an awful lot of advisors who don't have a designation that are very competent and do a good job.
Right.
Okay, so
Correct.
let's not think, oh, you don't have a designation, you don't know. No, there's lots of them
Yeah.
that are very competent and do a good job. But I do also believe that as an industry, the financial services industry, the insurance industry, designations matter. Professionalization matters. This is, and having a process that is a planning-based process as opposed to a sales-based process is the right thing.
Yeah. What's, lots of surveys, and this ties into this conversation, lots of surveys you can look at on who are the most trusted advisors, what does that sort of look like? And oftentimes insurance gets a bit of a bad rap in that regard. What's your perspective on that? Is that changing? Is that getting better?
I think it's getting dramatically better, to be honest.
Yeah.
I've seen some surveys, and I meant to actually try to find those before I came and saw you. But I've seen some surveys where insurance advisors are actually rated fairly highly. Now, what's interesting is
Who did the survey?
Who did the survey? But no, I think the survey is probably correct. I would buy into the survey.
Yeah.
But who is consistently rated the highest is accountants.
Right.
Right. Okay. But no, I don't think that today insurance advisors have the same sort of negative connotation that they might have had 20 or 30 years ago. I haven't seen that. And in some of the surveys, that industry surveys from LIMRA and the CLHIA, et cetera, insurance advisors are actually rated fairly high. Financial advisors are rated fairly high, but no one is rated as high as accountants.
Yeah.
Okay.
It's interesting.
Yeah.
I think maybe that's just the training, and it does take some time, as you say, to professionalize things and focus more on planning and give them the tools and the training for those programs to really make that impact. So you're starting to see that today. I would agree. We see that as well. How are clients' needs changing in this regard? How, insurance needs for Canadians? There's lots of different products, different strategies, but what are Canadians wanting out of their insurance advisors today?
I think they're wanting, they're wanting a plan. They're wanting to understand what they're buying. They want to be able to have someone to talk to about, their dreams, their aspirations, how I can use some of these products. I mean, some of the insurance products they're tremendous products, right? Very unique products, right? And complicated products. Mm-hmm. So depending on who you are, if you're a business owner and you're looking on transitioning your business to your children or to some employees, there's some great things that you can do with insurance products to make sure that you do that in a tax-effective way, in a way that provides liquidity when you need it. And really insurance products are the only things that can do that. And if you take it down to just the average consumer out there who is an employee, they still have the same type of needs for making sure that they're looking after their their spouse and their children if something would happen to them. I think, I'm big on insurance. I think it's a very good product, okay, genuinely. And I think that an insurance advisor that takes the time to listen to what the client situation is, understand that situation, talk to them, present them with some options, I think provides an incredible value to the consumer today. Yeah. Whether you're a multimillionaire or someone that's, making $70,000 a year and raising a couple of children. Yeah. I think it's a very important profession.
Yeah, no, I agree. Going through my background as an accountant and then actually becoming insurance licensed, working through that until I've heard this number of times, and then I had the opportunity to deliver an insurance check when somebody had passed away, and you really don't understand the true value of that until those moments.
I totally
sometimes
agree
it gets
with
a bad rap, but I think in the end the value is immense.
Yeah.
You mentioned options, and I think that we've had the opportunity to work with your toolkit, and I think one of the things that people really want is they want some optionality, they want some flexibility, they want some transparency. So talk a little bit about that, because I know you guys worked really hard with your tools to sort of lay things out in a very methodical sort of planning focused basis. So just maybe chat about that.
I think there's really two, this is a gross generalization, but there's really two types of insurance products out there. There's term products and permanent products, and they're very different, and they fill very different needs. And I think that the advisor should take the time to talk to the consumer, to understand their objectives, to understand what they're looking for, and make sure that they're helping that consumer. And again, whether it's the business owner passing on their $100 million business or the employee who just wants to protect his family, don't presume that you know what they want, and make sure that you spend that time to do a proper discovery, to talk to them about where they want to take this, because the products are very different, even though they're both called life insurance, right?
Right. And even within those products, like you say, if you've only got access to one carrier, so in the olden days where you're licensed and you're working for one insurance company, yet the products look quite different across the board. How important is that today? Like with the advisors that are working with you in the industry through PPI, talk a little bit about what they have access to and why that's important for people.
Well, I think there's about 20 insurance companies in Canada that that sell life insurance and life and health, like disability, critical illness, life insurance products. And although the product types are the same, there are very different pricing regimes. There are companies that have different preferences for underwriting, is a good example, like the selection of risk. Some companies clearly do a better job with older people than younger people. Some companies do a better job with younger people. They have their niches that they work in. So when you're working with a wide variety of clients, it's important to have a selection of companies so that you can pick not only the right product, but the right pricing and have the best opportunity to make sure that policy actually gets placed, right? That it gets underwritten. And then one thing that PPI also has is we have our own underwriters on staff. So in larger policies, we actually help underwrite the product to make sure that the best foot is put forward when the insurance companies look at that case to try to get it issued, right?
So you're having that flexibility, the specialist on your team ensures that you're going to get a better result for the client. Whereas if you have one product and you don't have that depth, it's going to be a lot more challenging. So the optionality, I think, in our experience in the planning side, very important. If you give clients one option, chances are they're not going to pick it. If you give them a few, they're probably going to pick one.
Right.
And then.
But that's where the discovery comes. Like that's where it's so important to understand what your client is actually doing.
Exactly.
Right. That's where and that's where professionalism comes in. That's where it's all about planning now. What I think we're seeing shift in the industry is products are almost becoming the commodity. Okay. And what consumers really want is they want a plan, right? They want a plan to make sure they protect their risks. Their risks, like if I get disabled, if I have a critical illness, if I die, what's going to happen to my family? They want to have a plan to make sure that they can retire, right? How does that work? And then, the best of plans, like life is not a linear path, for almost anybody, right? So things change.
Yeah.
So they need a trusted advisor that they can go and sit down with and say, hey, this just changed in my life. How does that affect my plan?
Right.
Both for investments and for insurance.
Yeah.
So I think that, to me, if I was talking to someone looking at getting into the business today, I would really focus on the planning side.
Mm-hmm.
The product side will fall out of that, but start with the planning side.
No,
right?
that's great advice.
Yeah.
And you talk about these. You talk about risk management, insurance, portfolio management, tax, estate, retirement, accounting, business. Like there's so much there. It's quite complicated, and I think the challenge today is that you can't know it all.
Correct. Yeah, I agree
Right.
with that.
And
Yeah.
so I'm interested in your perspective and PPI's perspective on integration. It's tough for one person. We keep talking about this trusted advisor, but I think planning as the focus as
It
a
might
starting
be a
point.
trusted team, Tim.
Yeah, exactly.
Yeah.
So how do you see that integration going? The accountants tend to be the most trusted, but they're dealing, I think that's largely because they're dealing with clients' largest assets, which is usually their business.
Yeah.
So how do they need to play a different role in planning from your perspective? And where does insurance and sort of that all sort of fit together? What are you seeing progressive firms doing?
Well, if you look at the large IROC firms, let's like the RBCDSs and Scotia McLeods, like that group, that's it's a big group of advisors. B, they're very well financed. They're owned by the banks. So looking at what they're doing is a good sort of way to look at the future in a lot of ways.
Mm-hmm.
They're all building planning teams, and they're all building networks of excellence of different types of advisors. So they will have a planning person who understands taxation, etc. A lot of young CAs actually
Or
are,
going to
or
the banks.
CPAs.
Yeah.
Haven't got used to quite saying that yet, but a lot of young CPAs are going to work at those firms and starting off as a planner.
Right.
And then they have, their portfolio management people, they have insurance specialists, they're building teams. And I think that it makes sense if you're a CPA today, whether you're running a practice or not running a practice, you want to make sure that you tie in with the right team that helps you pull together all this expertise, because it's very difficult to do by yourself, right? I mean, just the investment side is a whole area that you need to understand. The insurance side's a whole area. The planning side, although CPAs have exactly the right skill set, in my opinion, to do planning, it's a different thing than helping people doing financial statements and doing tax returns, which is the compliance side sort of overwhelms most CPA practices, I would think.
Yeah.
But you need to sort of build that team around you to be able to provide all those services at once.
Well, and I think that's working with PPI and really seeing a lot of that in action has been very powerful, because you look at the things that happen in our experience when integration isn't there. You're doing an estate plan, they've got a tax liability issue, the accountant's involved, but then there's an insurance need, maybe the insurance person's doing it on their own, they're not working together.
That doesn't work.
They don't understand
Right.
the business side, and so we structure things and we end up with poor results.
Right.
So how do you guys how do you guys sort of tackle that? How are you helping the people that work with your organization be better at that integration and help them surround a team like that? Because as you said, that's not an easy undertaking.
You know what? The first thing we do is, we provide some of those professionals to help our advisors work. Like, so we have accountants and lawyers primarily that help with the planning side. But what we also do and insist on actually is that you work with the client's professional advisors. Because I've seen situations in this short time, I was only an advisor for 5 years, but then for the last 20 years I've been working with advisors. And often, and this is no fault of clients, okay, a lot of clients have a complicated personal life from a business structure point of view, and they have a family trust, and the family trust owns these shares, and it was set up 10 years ago. And the truth is, they don't really know who owns their company.
Yeah.
They know they do, but how that is really structured, they don't really know. So it's almost impossible, especially in a complex situation, to help to provide someone with advice without engaging with their professional advisors.
Yeah.
And the professional advisor who generally has the best knowledge on this is actually the accountant.
Yeah.
Because accountants have the benefit of having an ongoing relationship with, because every year you have to file your tax returns and you have to do your financial statements and you have to, there's a need to talk to your accountant every year. Whereas with your lawyer, is a much more transactional relationship, right? Mm-hmm. So it's so important, and we encourage, and matter of fact, on larger cases, we insist that, you need to engage the accountant, because often the client will say, my operating company, well, it's held by my holding company. And they just didn't remember that, 5 years ago they did a freeze, and the growth shares are actually in a family trust. And, so you really need that integrated team is absolutely necessary, right?
It's been interesting. We've both gone from accounting to some form of insurance in our careers here. And I when I started attending insurance conferences and meeting with people, I heard quite a few times that, well, we don't want to get the accountant involved because they're going to kill the deal.
Yeah, see, I disagree with that.
Yeah, and I do too. I do too. But at the same token, being an accountant and talking with as many accountants as we talk to, they also are a big part of the problem. And I think the reality is, just based on maybe the history of insurance and being more sales focused, and accountants having some of these negative experiences, they sort of pull away from it. And I think
some do.
They don't necessarily have the education to understand it that clearly.
But see, I think you just hit the nail on the head, though. Okay,
yeah.
Is that they don't have the knowledge. They haven't taken the courses. They don't understand it. Right? Insurance is a complicated product. The taxation relating to life insurance, especially corporate-owned life insurance, is complicated. We actually produce a little booklet every year that goes through and talks about the taxation of life insurance. And I know lots of accountants. We send it to lots of accounting firms who use that to help them get up to speed with how a life insurance policy actually works and how it works when it's corporately owned. And then the policy has an ACB. It gets credited. Yep. Part of it gets credited to the CDA. How does that all work? So they don't really appreciate that, because the truth is you can't expect them to know everything. The body of knowledge for an accountant today is just so massive that they specialize in the areas that they tend to spend most of their time on. And what is that? Well, unfortunately, it's financial statement preparation and compliance and tax compliance, right?
Yeah. Well, and I think, those are traditional mindsets. I think they still exist, obviously, but I agree with you. I think we're seeing some progress being made there.
Clearly seeing some
change. There's a lot more integration. There's more teamwork involved. And as you said, it's critical that happens if we're going to get great results for clients. Right. Let's talk about transparency. Accountants with auditing and that background, and making sure that everything is clear and objective and all those things. Let's talk about compensation, because I think part of the challenge that advisors have today is, how do you integrate all these professionals in a way that makes sense? They're all compensated differently. It's either by the hour, or it's asset fees, or it's insurance commissions. What are you seeing today that organizers are doing to try and make that simpler for people? Are you seeing anything creative happening there?
I'm not sure we're making it simpler, but I think that what you are seeing as more accountants are involved is you are seeing more transparency. But I'm not, unfortunately, you hit the nail on the head, right? Accountants generally charge by the hour. Asset management is generally done, as a percentage of the assets. Insurance is sold on a commission basis, commission being, based on the premium, right? So they are all different. I'm not sure that will change, okay?
Well, and I want to talk to you about that, because you're seeing some things happening around the world. I'm interested on that perspective.
Well, what we're seeing is most of the regulatory activity that we've seen to date relates to the fund side of the business. So, especially in Canada, okay? So, we've seen this, just come out in the last, I think, 2-3 years, disclosure relating to here's how much it's costing you to have your, funds managed, and much better disclosure, a breakdown of the MER, the management expense ratio, what's the components of that, how much is it in total dollars now being disclosed on a statement. So I think that, that's a very positive move from the point of view of the funds business. We haven't to date in Canada really seen disclosure of the amount of a commission when a policy is sold. What we are seeing, though, is we've seen removal of some of the potential conflicts of interest, if you will, relating to the sale of life insurance. There used to be, there aren't anymore. There used to be conferences that people could qualify to go for. The industry has removed all of that, and I think that's a positive
things to sell a certain
and I think
product.
that's a positive move.
Yeah.
I agree with that move, but we haven't really seen yet disclosure of the magnitude of the commission. I'm aware that the CCIR, the Canadian Council of Insurance Regulators, which is all the provincial, like insurance is regulated provincially, so it's different, but this is the organization where they get together to talk about common issues, is starting to look at commission disclosure. You do now, as a life insurance agent, have to disclose that you're earning a commission. I mean, I think to me that was sort of relatively obvious, but you now disclose
now it's more
that.
dollar amounts. And
So now the conversation is switching to the magnitude. I don't think this is something that is imminent, but it is something that, probably 10 or 20 years from now it will be there. But it's going to take some time to work through those issues. I think the bigger issue relating to compensation in the life insurance industry is that an awful lot of it is upfronted. Whereas on the money business, it is sort of
service-based over time.
It's service-based.
Yeah.
And I think that we will see a switch. Again, nothing's going to happen in 2022 here, right? But I do think we will see a switch to a more levelized type of compensation in life insurance at some point.
So what's driving that? Is that the consumer? Is that regulatory bodies? Like, what's the benefit of going to a levelized approach from your perspective?
I think the benefit, what the regulators believe the benefit is that it will provide the agent with more incentive to provide ongoing service, right?
So, hasn't there been examples in other countries where they've done that, and didn't it cause major issues in their insurance?
In both Australia and in the UK, there's been examples, and generally speaking, what's happened there is that there wasn't as much advice available, right?
Right. So people were being underserved.
People were being underserved, which is not what we want. Because the truth is, most Canadians, or the average Canadian, is underinsured. They don't have anywhere near the insurance they would need if something was to happen to them.
Yeah.
So I think we have to be very careful how we tread down this road, right? Like, I don't think it means that we have a, just a carte blanche, this is where we're going. It's going to take some thought and, working together between the regulators and the industry to make sure that it's done in a thoughtful way that doesn't remove half of the brokers from the marketplace, because we already don't have enough people in the industry. So let's not get rid of half of them because of some concept that we don't really know what that's going to do to the industry.
Yeah, that would be a bad result.
Yeah, that'd be just a horrible result. Yeah.
So I think, the accountants leaning into this as well, like as these lines blur and we've got some crossover here, as you're aware, in Canada, the Alberta rules have changed over the last number of years on referrals, commissions. They're now opening that up to allow them to be more involved in that process. There's likely going to be some good and some bad things that come out of that as well. They have to disclose under these new rules. They're going to be forced to talk about the dollar amounts if they're involved in that process. So it feels a little bit like that's probably going to be inevitable. Do you have that sense?
I would agree.
Yeah.
I would agree. It's inevitable. It's just the time frame. And, I think that accountants are very well suited to be part of you need the accountants to be part of the group to provide comprehensive planning, right? So to me, it makes sense, and accountants as the most trusted advisors that there are, right? It just makes a huge amount of sense that accountants get involved in the delivery of these services.
These solutions, yeah.
Right.
Let's shift gears a little bit. Let's talk about technology and what you feel. Do you feel the insurance industry is leading in that? Are they lagging?
Let's use words like lagging. Yeah.
Where do they sit? How are they going to be disrupted? What are the opportunities that are coming as part of tech?
Before I talk about the current state of technology, let me just give my little speech about why they are so lagging, because they're extremely lagging in technology. An insurance product that is bought today might stay on the books for 40 or 50 years, okay? Whereas most financial products turn over, much quicker than that, right? So insurance, just by the very nature of the product, it's harder to keep it on a current platform because, you're making this commitment that you're going to keep for 40 or 50 years. So generally speaking, what you see the companies doing, either when they develop products themselves or when they purchase other companies and they inherit products through an acquisition, is they just keep them on the same technology platform that they were originally built on. So we have lots of cases today in Canada where, some of these older permanent insurance products that were sold are still run on a platform that was developed 30 or 40 years ago. Mm-hmm. And a platform that was developed 30 or 40 years ago isn't very current. Right?
Yeah.
And doesn't have, primarily things like the accessibility to information online and all those other things that, that we're used to, right? When we deal with our bank or we deal with a PM or whatever, right? So there's a reason why they're so far behind. I'm going to divide the conversation into prior to the pandemic and then after the pandemic. So prior to the pandemic, I think about 70% of the applications that our firm received every week were still paper-based applications. Wow. So, and several of the carriers, some carriers did have electronic online applications, not all of them, which is surprising. And a lot of them, their online paper applications were sort of in their infancy or were not very well developed, were not very friendly, people weren't using them. The pandemic provided the insurance industry sort of the kick in the butt they needed to, improve their online services. And we've seen more development in the last 18 months in this than we saw in the probably 5 or 10 years before that. We are now at PPI, 70% of our applications are online, but still that means 30% are still paper, right? But what we've seen, most importantly, is that the insurance companies have witnessed that during the pandemic, those companies that had a good, seamless online technology platform, etc., increased their business.
Dominated.
And
Yep.
those that didn't. So we're now seeing all the companies very interested in investing in that, improving the services. And I think we're going to see some really exciting things in the next couple of years here relating to the delivery of new insurance products in an electronic way. Mm-hmm. The challenge that the industry has is all these older products that they have on these old legacy systems is just very difficult, and very expensive for them to deal with. Yeah. But I'm very optimistic that we're going to see some pretty good things coming out of the carriers here because they sort of got woken up during the pandemic as to just how bad they are. But
that must be relieving for you because I'm sure you've had some levels of frustrations over time in terms of their moving that needle and obviously that makes it easier for you guys as you're working with your advisors through those carriers and seeing progress there. So I'm sure you're
it's easier, but it changes the resources that we need too. Mm-hmm. We've added quite a few of our own technology people. We're moving, we're also, doing, improving our ability to help our advisors with technology. So it's changed, what we're doing too.
So let's talk about that a little bit because, we talked about applications being paperless and easier and more efficient. what are some of the other things that technology for an insurance advisor, how is it playing a role, or even financial services? What are you seeing?
You know,
there?
we're seeing a lot more online planning tools, a lot more specialized tools. We just introduced a tool into our sort of online, we call it Stratosphere, that our advisors can use. That is what I call a drawdown tool. So it helps an advisor help their client say, okay, you have non-registered money, registered money, TFSAs, you have a pension, here's how much you want to live. Let's look at the most tax-effective way to draw that down. So the tools available to an advisor to provide their clients with services are just way better than they were 10 or 15 years ago. And we're just seeing every week, if not once, I get a call from some person who has the newest, latest, greatest program that all our advisors absolutely can't live without. What we're also starting to see is from the carriers, their ability to give us, like very few carriers, or if any, have any type of access to live information, right? Like yes, you can go on and sort of get it, but the information is static, really. But we're getting a lot more feeds into our system, so our ability to provide advisors with sort of current information on all their clients and policies is improving like very quickly. Like we're really seeing a big change in the technology.
Yeah. Well, and everybody seems to be interested in the data and how we're making it more usable and sort of integrating that in real time to be able to make more efficient decisions and timely decisions, and to sort of push things out to clients as well.
Right, yeah.
It sounds like you guys at PPI, you're doing the same types of things. You're trying to sort of create those.
We're trying to create this pool of information that our advisors would have on all of the policies that they have and all their clients, so that first off, there's one stop for them to come to. So if they've sold policies with 10 different insurance companies, to get that information, you're going to 10 different websites, 10 different sign-ons. Well, we're building that all in one place. So no matter what insurance company it is, we will have that information. Yeah. And, it might not be refreshed daily, but it might be refreshed weekly. And that's just issues with, getting the feeds, how many feeds there are, how many companies there are. We're still working with these old legacy systems, right? But what you're seeing is a dramatic improvement in access to information in the life insurance business.
Well, it's even nice to see there starting to be some more opening up of even things like account aggregation through the banks.
Yep.
And, that's been a challenge for, I always say I think the banks in Canada have had a 20 or 30-year head start when you maybe look south of the border.
Yep.
To, hire accountants, build these teams. And our profession as accountants are starting to catch up. And being able to have access to that data through the banks and start to pool that type of information is just going to make things easier as we go. Let's talk a little bit about your experience in scale and growing companies across the country. You've had tremendous success in doing that. We've got some listeners here that are trying to take over the world in the accounting space and grow. You see some companies being really successful doing in the cloud and online. What in your career, what are some of the learnings you can sort of share in terms of scaling? If you're trying to move across provinces or the country, what have you taken away from your experience?
Well, first off, it's harder than you think, right? And the most important thing to look at when you're looking at acquiring someone or merging with someone or bringing them into your group, is culture. Right? I mean, culture matters more than anything else. Do they have the same values as you have? Do they treat the client the same way as you do? So, I mean, it sounds a little bit trite almost to say culture is the most important, but I think culture is the most important. Don't kid yourself. You're not going to realize synergies immediately, like financial synergies, cost-saving synergies. What I found as we were buying, smaller firms, there almost was a negative synergy because They didn't have, they didn't do their accounting in a timely basis. They didn't have good IT systems. They didn't have any type of governance model. So when you thought, okay, I'm going to take these companies, put them together, and I'll be able to save money, no. Maybe you could save some money in the long term because there are some synergies that you can get. But when you're looking at, generally purchasing smaller firms, there's actually a negative synergy because they're not doing things very well. Okay. And
it's kind of a catch-up period.
There's a catch-up period. And, anybody who watches this who's worked with me for the last bunch of years will laugh at this, but everything always takes longer than you think, right? It all sounds simple. We'll move them onto our back office system. Well, that involves converting their data and dealing with all of those things are just very, very time consuming, and everything takes longer than you think. But that being said, I do think that in our case, and I'm sure it's also true in accounting firms' case, is that there is a level of scale that you need or you cannot provide the services. Right. Okay, so it's still the right thing to do. It's just it's not easy, right? Yeah. But you need to have scale. In our business, you for sure need to have scale, and I think that scale is still going to become more important. Like I mentioned earlier, I think the top 5 MGAs in the country sell 55% of the business now. I think that in 5 years, that will be the top 5 sell 85% of the business because the smaller people just can't provide the services. We have 25 people in our IT department. If you have 6 employees, you don't have 25 people in your IT department, right?
Yeah, and flipping back your accounting hat back on, where do you see that in the accounting industry growing today? Like, you've got the nationals and you've got, firms, but do you see that changing much like what you've seen on the insurance side? How do you see the accountants avoiding some of the disruption? We've got technology disrupting their businesses. A lot of that's going to be replaced. How do you see that changing?
I think that an accounting firm today needs to look at finding ways to, broaden their different revenue streams, right? I think compliance in some ways, tax compliance in some ways is getting more complicated for those people that, actually, have a complicated situation. But I see the day when people won't be even filing their tax returns. CRA has all the information. Why don't they just file the return and send it to you and say, here's what you owe us. If you disagree, tell us. Because 90% of the people won't disagree. Yeah. So I think that an accounting firm needs to look at how can I provide other services? How can I wrap my arms around these clients that I have and provide a more full suite of services? What you're seeing, a good friend of mine has his investments at TD Private Wealth, and he told me the other day, he says, this is amazing. Like, they file my tax returns, they do my accounting, they do everything. Well, they're muscling in on your business. You need to muscle in on their business, because I also think as the world, for those people that do have a certain level of wealth, the world is a complicated thing. And if you have an investment person and you have your accountant and you have your lawyer and you're the one trying to juggle and coordinate all that, that's hard to do, right? So I think the accounting firms should look at how can I provide this more comprehensive service so that I'm not losing my higher net worth clients to the people who are actually trying to take away the accounting business that they're doing. Right?
Well, I think, the race is on, and it's just interesting, the conversations, and you're saying the same things, that I think every professional, anybody in the financial services industry today, whether you're a lawyer, an accountant, insurance, portfolio manager, they're all trying to do that.
Right.
I think they're all trying to have this comprehensive offer.
Yeah, for sure.
So, if you're not part of that trend and story, I think that's where some people get left behind. So I would agree and echo that with you, Jim, that's going to be important.
And I think the pool, Tim, the one thing I think it really makes sense to say here is that there is so much need for proper financial planning out there, right? Like, it's not like, these people are going to take all the clients. There's way more clients than people fulfilling this need now, right? I mean, there's just so much need for this that there's lots of opportunity for everybody. Okay, like it's not like,
For sure.
these high net worth people, like the TD Wealths and the RBC DSs that they'll take it all. Well, no, there's just so much need that there's lots of room for everybody here.
Exactly.
Okay.
Yeah. Well, thank you so much for sharing that perspective on the industry and client needs and accountants. I love that. We always take a minute in our podcast to talk to our guests about the things that they're reading. I always appreciate that. And so, Jim, what you brought a book here today?
I brought a book.
Yeah, let's tell us about it. What are you reading? What are you liking about this book?
Well, I've read this book twice actually in the last couple of years. I just read it again recently. I don't know where the camera is, but Factfulness, and it's a book that I like to read things that are positive. I don't really read a lot of fiction. I tend to read more factual books that are positive, and this book really helps you think about all of the positive things that are happening in the world, as opposed to, oh boy, we have all these climate change problems and we have all these, pandemic problems. It sort of walks through, I think it's 12 or 13, things that are happening in the world, like, the health of children around the world. And actually says, there's been a huge amount of improvement lately, and there's a lot of really good things happening. So I just find when I take a break to read something that I like to read something that makes me feel better as opposed to watching the news.
Yeah, there's so much negativity out there that you need the dose of that on a regular basis, or it gets pretty distressful.
Exactly. Yeah,
So,
I agree.
Well, thanks for sharing that. I haven't read that book. I'm looking forward to taking a read through it. So thank you, Jim, for that. I will wrap up here. You've got a wealth of knowledge and experience. I've, as I said at the beginning of this, really appreciated the time that I've had to spend with you over the years, and always learn something new from you when we talk. For our listeners that are out there, what resources, if they want to learn more about the insurance industry or PPI, what resources do they have if they want to reach out to you, Jim, or your firm? What's the best way to go about doing that?
We have a great website. Just go to ppi.ca, or happy to talk to anybody. Just jvirtue@ppi.ca. Shoot me an email. I will get back to you. Might not be the same day, but I will get back to you. Happy to talk, and happy to talk about the industry and how it could tie in with you. Yeah.
Well, thank you for that offer. I'm sure you'll get lots of people taking up on that. So I want to just close off by just saying thanks again, Jim, for the time today. It's been so nice. We are socially distanced here, but we're still in the middle of a pandemic,
yes.
And it's nice to get together. I appreciate you coming in and taking the time to actually sit with us here today. It's so refreshing to do that this way than over Teams, yes, or Zoom. And so thank you for doing that and for sharing your knowledge with us today. And on that note, that ends this edition of the Innovative Accountant Podcast. Thank you for listening.